All right, good evening, everybody. Hope you all are doing well. All right, it is Tuesday. It is March 28th, 2023. It's about 8:54 p.m. We are now live from 31st Street and Madison Avenue in New York City. It was a pretty busy day on Wall Street. We do have a couple things to talk about, but does anybody remember we had a conversation about Lululemon over the weekend? I think it was on Sunday. So they did report their quarterly earnings today after the bell. The stock's up, I think, 13% after hours. They reported a really, really good quarter. But I think what was more impressive, not just the quarter itself, it was the forward guidance. So shares of Lululemon are about 13% higher in after hours trading following the earnings report. Through Tuesday's close, the stock is about flat for the year, putting the company's market value at $40.87 billion. Now, let's take a look at the earnings of the EPS. EPS came in at $4.40 versus $4.26 as expected by the majority of analysts polled on Wall Street. So we have a beat on the bottom line. If we look at the top line revenue growth, we have a beat there as well, coming in at $2.77 billion versus $2.7 billion as expected by analysts. Now, it wasn't all good news. We have some margin compression here. Also, net income fell. So if you look at the fourth quarter, net income did fall to $119.8 million or 94 cents per share from the $434 billion or $3.36 per share a year ago. I think that's actually a typo on CNBC's part. So this is coming across the tape right now. I think they meant to say 434 million, not billion. I think that may be a typo on their part. But anyway, earnings just came out. So we'll talk about Lululemon a little bit. But the real major topic for tonight, everybody, is the housing market. So we did hear from S&P CoreLogic. They did release their Case-Shiller housing price index, and we do have declines pretty much across the board. So we're going to talk about that. However, if you look at the report. Now that I'm near my computer, let me actually put it in the chat. I did program it in the Nightbot as well. If you type !SPC in the chat, once again, !SPC, it will bring you to that link, or you could just click on the link that I posted in the chat there. But we're seeing this sort of bifurcated market, which is really interesting. You're seeing the West Coast, almost the entire West Coast, suffering from significant price declines, while pretty much the entire East Coast is holding steady and is actually positive. And it's not just Miami, it's not just Tampa, Florida on the East Coast. It's pretty much all up and down the coast. It's Boston, cities like New York are holding strong. But the real, bad spots, look at a city like San Diego. Significant declines there. San Francisco on a year-over-year basis, almost 8% declines. This is some really big stuff. Now, we'll talk about some of the reasons why the West Coast is not holding up as well as the East Coast. We'll talk about that and we'll decipher that. I want to take a quick look at gold, though, before we start. Gold is trading at $1,970 an ounce. If we take a look at silver, ticker symbol SLV for the paper, we're about $21.43. And last but not least, if we look at the digital gold product, which is Bitcoin, I think we're still just trading below 28,000, 27,291 to be exact. And with that, everybody, let me pack up my stuff. We will get started. We're also going to talk about the dollar today, or the Dixie. I do have some concerns about the Dixie overall. Now, if you go to tradingview.com, you punch in ticker symbol DXY. Right now, we're trading at about 102. However, if you look back at the chart to February 3rd, that was the major swing low of about 100. So if we break 100, I think we could have a pretty fast track to about 96, which I think actually may, strangely enough, may be stock market positive. I'm just trying to get my backpack together here. Just bear with me 2 seconds. All right, I got the paper. Cool. All right, let's head out. Hey, Ryan Beck. Good to see you, sir. See Gary Carpenter, Hawaii. Welcome, welcome. Now, we also do have a little bit of breaking news coming out of Apple. I'm not sure if any of you heard. Now, today, Apple announced some sort of a buy now, pay later service. And if you noticed, a main company publicly traded called Affirm was actually down, I think, double digits just on that news announcement alone. And for some reason, I thought we talked about this already, but we'll quickly cover it again. Hey, Julia M is here. Good to see you. Hopefully it's not raining. No, I think we're good. Let's see. Yes, sirs. Yes, team. We are all clear. So just for some context here, we're reporting live on East 31st Street and Madison Avenue. It is a pretty clear night, a little bit chilly though. I'd say it's probably about 54 degrees. Give you a quick shot of the sky. Now we are going to go uptown tonight. I think tomorrow we're going to head to Greenwich Village, but tonight, let's head up towards Central Park, because I need to sort of stay in the vicinity in order to catch my train. Who else do we have in the chat? Sabrina Fair is here. Brick Stonewall, welcome. It's good to see you. Sally is here. Photos from around New York. I see Ryan Beck is here. Vincent is Yotam. I play. Oh, very cool. So you were long Lululemon going into earnings. Now it's interesting. So Lululemon, ticker symbol LULU, reported after the bell. Now I think the main reason why the stock is up is because they reported pretty good forward guidance. I didn't have time to do too deep of a dive into the report. I was so busy. I was too busy reading over all the housing data we got, which we'll talk about today. Case-Shiller CoreLogic home price index came out today, and we're seeing a very, I mean, I shouldn't say strange, but it's a very glaring trend. It's almost as if one half of the country is totally unaffected in terms of price declines on a relative basis, when you're having the West Coast really get decimated. I mean, you now have double-digit year-over-year price declines in some West Coast cities, like San Francisco. I think San Diego is down almost 7% on a year-over-year basis. But cities like Tampa, Florida, cities like Miami, Florida, are actually holding up relatively well on a year-over-year basis. But again, as I always say, it's more important to look at the month-over-month changes, in my view, as opposed to year-over-year. But I still think, looking at the year-over-year data, it really sort of sets a precedent for what's going on. That was a pretty nice shot of the Empire State Building. I think what we're going to do is walk directly up Madison Avenue. Hopefully it won't be too crazy or too crowded tonight. I see Japheth is here. Edward Adams, good to see you. Sunshine After Rain is here. Sparks Carnival, what's up? This is AO. Hello, team. Hope everybody is having a good week. Sparks Carnival, what do you think about the announcement from Apple today? Now, did Apple just put all of these buy now, pay later companies out of business? Now, I may actually go a step further and say that Apple is probably coming for the main credit card issuers as well. Because if you think about the user base of Apple, I mean, pretty much, I shouldn't say everybody, but a lot of people use iPhone, right? A lot of people use iOS, and a lot of people use Apple Pay. I could tell you from my personal experience, if the store that I'm shopping at does not accept Apple Pay, I'm probably not going to shop there. All right, so this is Madison Avenue, 34th Street. So now, with this announcement, I think it's called Apple Pay Later. I think that's the official name, what they're calling it. I'll give you guys a quick shot of the Empire before we head up. But just based on the news alone, or I should say the announcement of the Apple Pay Later, I think Affirm and a lot of the other buy now, pay later, or the Bnpl stocks, were down double digits across the board. And as an investor, if you think about it, why would I take a risk, investing in an unprofitable, pretty much like fintech company, right? When I could buy Apple, get exposure now to the buy now, pay later business, which they're probably going to dominate, by the way. And the company is ridiculously profitable, and they have mountains and mountains of cash. So I just don't see, I think it's going to be a big problem for a lot of these competitors, because everybody, and again, speaking anecdotally here, between my friends and myself, almost everybody uses Apple Pay. So now to have the ability, let's say if I'm walking into Best Buy or something, right, just as an example, and I want to make a big purchase, let's say if I'm buying an appliance or something like that for $2,000, I now have the ability to split that payment up, interest-free, by the way, into 4 payments over 6 weeks with no interest, right? With no added interest. So I think pretty much Affirm is done, and a lot of the other buy now, pay later companies. But what do you guys think about the announcement? I'd love to know your thoughts. This is just another way for Apple to dominate. Hey, Julia M is here. Welcome. DA says, hey, Tom, what's the difference between Apple Pay and a debit card? Well, I think Apple Pay is you could just put your credentials of like a credit card or a debit card into your phone. So instead of carrying around your physical card, you could just tap the home button twice. Your Amex card pops up, or your Chase debit card pops up. It's just a little bit easier for transacting instead of carrying like 30 different credit cards, right? Because I think the statistic, and don't quote me on this, but I think the average American has 3 credit cards on average. So instead of carrying all 3 of those around, you could just punch all of those into your phone and only carry your phone. It's a little bit easier. Check this out. This is the Morgan Library right across the street. Hey, Kevin Ramsey says PayPal has Pay in 4. Matthew M says I use Samsung Wallet and Google Pay. Yeah, I'm seeing a lot of comments. Everybody here uses some sort of virtual or digital payment system. Eddie B says Android here only. So I'm assuming you would use like a Samsung Pay or something like that. Wendy England says Apple just needs one bad hack, one bad problem, and poof, diversity is best, says Wendy England. Maybe, but I think, a lot of companies are susceptible to cyber attacks and things like that. Destructionist is, finally able to catch a live stream. Good to see you, Destructionist. God bless you. Thanks for being here. We see the beautiful One Vanderbilt in the distance. Hey, Dan Zhang says, Tom, have you seen the news that Alibaba will be split up into 6 groups? I saw something like that. I didn't have too much time to read into it. But what is it going to be, Dan? Is it going to be a spin-off and they're going to IPO them separately, or what are they going to do with that? I didn't really have enough time to look into it. Hey, Horatio Snipes is here. Good to see you. Welcome. R. Wally 1965 says interest rates, higher cell phone companies won't want to pay for financing for new phones. Maybe. Hang with Mark Mom says my son would definitely use Apple Pay, but no need to pay later as he's paid in full every month. Yeah, I definitely agree. That's obviously the best way to do it. Now, I guess the value proposition for these buy now, pay later companies, right, is they're essentially 4 to 6 installment payments with no interest, right, to sort of help you, break that cost up if you don't have the money all at once. Now, I've never really been a big fan of this buy now, pay later stuff, but if we're being honest, there's obviously a market for it, right? Obviously, there is a market for it. And a lot of people who, may have a low credit score or something like that, who unfortunately don't have access to credit, or they have a very limited or low credit limit. Let's say if you have a Discover card or something with like a $500 limit. If you look at the data, they're turning to a lot of these sort of buy now, pay later programs, like Affirm being one of them. Now, I think this is obviously a way just for Apple to crush the competition with that, which I think they're going to do, by the way, and pretty seamlessly and easily. Now, I think my biggest concern for investors in those particular companies like Affirm and the like is that why would you, now that Apple is in the buy now, pay later business, why would you bother the risk exposure to that? Does that sort of make sense? Because this is almost like the argument, does anybody remember the argument we were talking about as it relates to, broker dealers that offer cryptocurrency trading? Does anybody remember that? Now, I'll give you a quick example and a quick refresher. So Coinbase does not, they're only a broker dealer for cryptocurrency markets, right? So Bitcoin, Ethereum, and the like.
Wait, listen.
However, if you look at another broker like Interactive Brokers, and I'm just using that as an example, right? You can trade Bitcoin and other cryptocurrencies through there, but if, let's say, this whole crypto thing doesn't work out, well, it's probably not going to really have that big of an impact on Interactive Brokers, right? Because they have a huge options derivatives business, they have huge equities trading business, obviously. But if the whole crypto thing doesn't work out, well, Coinbase is a zero, pretty much, right? And I guess it's sort of the same thought process that I have now as we're here on East 38th Street with a lot of these buy now, pay later companies. You know, let's say if Apple, the big dog, which they just announced they're getting into the business right now, if they have ample amounts of cash, right? Let's say they have a couple bad loans on a lot of these, you know, buy now, pay later, the people don't pay, they default. Well, Apple has billions and billions and billions upon billions of dollars in cash reserves to be able to account for that mishap. You can't really say the same thing about those other companies like Affirm. So as an investor, why would anybody take on the added risk of getting exposure to buy now, pay later individually when you could just buy a huge tech conglomerate that has a massive software business with reoccurring revenue, a massive hardware business, which is pretty much a monopoly, and now they're technically in the credit business, right? With the Apple credit card. I don't know, any thoughts there? I think it's interesting. I think it's going to be really, really interesting. Hey, Penelope, what's up? Good to see you, Penelope. Penelope is joining us from Tennessee. Tennessee has been another state that has really, really benefited from a lot of the outflows of California. Well, here's some good news. We start to have some flowers blooming here on Madison Avenue, thank God. Okay, Randy the Machine says, Affirm charges interest over a few months or so. Credit challenged PayPal is interest free on their pay in 4. Now, I didn't know that, Randy the Machine. Now, it was my I've never used these services, by the way, but from my understanding, what I thought is that you could break, if you're using a buy now, pay later service, the value proposition there, I guess, is that you could split it up over time into 4 to 6 payments with no interest. Now, where they get you is if you do miss one of those payments, the interest is huge. And I think they really bang you over the head, assuming you miss a payment, right? But it was from my understanding that the payment breakups are non-interest bearing loans. Is that correct? I always thought that's how it worked. This is Mulligan's Pub. I always like the look of it. Sort of very classic looking Irish pub here. Hey, Zabatata says, yeah, but in case of default, Apple will still lose the money, and going after people is not that good for Apple's pristine image, says Zabatata. Perhaps. Ryan Bex is so interesting to see the buy now, pay later get a bid again with Apple. Those other ones have gotten crucified. Yeah, it's, I mean, I really think just all the pure play buy now, pay later businesses are going to get absolutely smashed. Now, Sparks Carnival makes a very good comment. Very, very good, interesting comment, by the way. And it's true. Now, if you look at the trends, right, and we're going to talk about the housing market in a minute, but I just think this is important because there's a lot of things we could draw from these sort of new creative financing ways, right? Specifically buy now, pay later. And perhaps you could use it as a proxy for the health of the consumer, the American consumer. So if you have boatloads of people turning towards buy now, pay later, what does that imply about their financial health, you know, of the American consumer? Real quick, this is a really good place, by the way. Dig. It actually used to be called Dig In, but I think for branding and marketing purposes, they changed this. It's actually a really good place. But again, if you look at the data, we have now, I think, reached all-time record highs for average credit card balance in the United States. People are racking up balances on their credit cards, which one could assume with the environment of inflation that we're living in, with rents still elevated, with fuel prices relatively still elevated, and food prices still elevated, and actually going higher, by the way. We'll talk about that too. It seems that to make ends meet, consumers continuously, or I should say continue to dip into their credit cards to do that. And I think buy now, pay later is just another one of those options where, in my view, companies probably got together, right? and said, how could we entice consumers to continue their spending habits even if they're a little bit strapped for cash? Well, I think buy now, pay later is technically a good solution for that. I don't think it's fiscally responsible in many cases, but if I'm a chief marketing officer at a company, this is one Vanderbilt, by the way, and I want consumers to continue to spend even though I know that maybe their household income may be going down, they're maxing out their credit cards. You want to we talked about friction, right, with Amazon. You want to reduce friction as much as possible. So if there's a $2,000 appliance and you couldn't, quote unquote, afford it otherwise, but you can afford, 4 payments over 16 weeks, no interest, that will spark consumers to continue to stay on that wheel, if you will. So it's interesting, but I think Sparks Carnival makes a good point. Looking at buy now, pay later growth, there'll probably be a lot of data on that as we look at the Chrysler building. It's not necessarily a healthy sign for the consumer. Hey, Brad's Brains, is buy now, pay later a Ponzi scheme for companies? I would probably half agree with that. Jafet Perez says, what are your thoughts on Amazon, Tom? Just in general, or specifics about AWS, or anything specific, or just overall, my overall opinion? Hey, Julia M says it's called layaway. It's so old school, it's ridiculous, but the problem is if you don't pay after the allotted time, you pay massive interest. Yes, Julia M, and that's sort of, I think here's one of my predictions over the next couple of years. Man, the Chrysler building looks amazing tonight. Now, here's one of my main predictions over the next couple of years. I think a lot of these buy now, pay later businesses are probably going to get hit with some, or potentially maybe some civil suits for predatory lending practices. Now, technically they're not, lending direct, I guess, but to Julia M's point, if you read the fine print and you miss one of these payments, the interest is just ridiculous. And that's obviously how these companies make money, right? So it kind of sounds a little weird, but they kind of want at least a portion of the consumers that miss the payments, so they make a little bit of money. That's a good point. Truth Tellers is with layaway, you don't get your product immediately. With buy now, pay later, you do. This is Truth Teller. Daniel G says, hey Tom, how are you? What's up, Daniel? Welcome. I'm having a late night coding and listening to your stream. Daniel, thank you so much for being here. Daniel's joining us from Buenos Aires, Argentina. Big shout out to all of our friends in Argentina. Hey, Ken Brockton says, buy now, pay later equals free money. Why spend mine when I could spend Apple's? I think that's one way to look at it, potentially. That's one way to look at it. Yeah, I don't know. I just thought I'd bring it up today because, just look at the reaction in the market. We'll just quickly talk about this one more time. The market is definitely signaling that this spells trouble for pure play, buy now, pay later businesses like Affirm. Just on the announcement alone, when Tim Cook and Apple came out and announced Apple Pay Later, which essentially allows users to split their purchases into 4 payments over 6 weeks, Affirm dropped 7% on the news, right? No fundamental change, no earnings, no nothing. But I think you're going to see a lot of market share being stripped away from Affirm. Now, the last thing I'll say, and we'll sort of move on to a different topic, it's the ecosystem. I think that is the biggest risk. It's the ecosystem. So what do I mean by that? Well, chances are, if I had to bet, there's probably 70% of the people that we're walking past right now on the streets in New York that has an iPhone in their hand. Now, based upon the fact that you carry the iPhone 24/7, 365, you are, by default, in the Apple iOS ecosystem. So let's say just half of the 70% use Apple Pay. Well, Apple's probably going to start sending your phone notifications. They're probably going to start sending you emails. Maybe they'll send you, an automatic text or like an automatic iMessage telling you about the program. if Apple owns the infrastructure, we got a really nice Tesla taxi coming up here to the right. That's automatic customers, right? You don't have to do any marketing, right? A firm has to spend money on marketing. They have to get their name out there to get people to use their buy now, pay later service. Apple could just send you, an automated email, or they could send you a push notification on your phone. You are automatically in the ecosystem. And I wouldn't doubt that pretty soon, and I'll let you guys know because I use Apple Pay every day. This is a really nice Tesla taxi, by the way. Looks brand new. Now, I wouldn't be surprised that over the next coming months, let's say if I have to make a big purchase somewhere, right? For example, let's say if I go to Home Depot and I, tap my home button on my iPhone twice to pull up my Amex card for the Apple Pay, there's probably going to be some sort of a notification that comes up when I tap my phone on the credit card reader in Home Depot or wherever, right? I'm just making an example that says, do you want to, split this up over, 6 payments? And it's going to say opt in, yes or no. And you'll be able to probably do it right there on the spot. So I don't know. I think I would stay, if it were me, right? I can't give any advice, but I would stay far away from a lot of the pure play buy now, pay later companies because, Apple just owns the ecosystem and they could pretty much force you, maybe I shouldn't use the term force, but they can pretty much persuade you rather easily to use their service over, let's say, a firm that, really nobody knows about, the vast majority. So, hey, Hawaii, what's up? Just listening while using my stepper. I've heard that Peloton was supposed to come out with some sort of a treadmill. Did that ever happen? Hey, Dan Zhang says, Tom, do you think you would have done some stupid purchase back in college or high school if buy now, pay later was a thing? Oh, yeah, for sure. And Dan says, I definitely would have fell into that trap. I probably would have too. And, Dan actually makes a good point. And here's what I'll say. Now, maybe I wasn't old enough for this, but, let's say, when my brother's a couple of years older than me, he's about, 5 or 6 years older than me. Now, there used to be credit card companies that were actually allowed on the campus to solicit credit cards to college students. Does anybody remember that? And they do that for a reason, guys, right? There's a reason why credit card companies wanted to come on to a college campus to essentially sign up students for credit cards, right? And it's not because, they're so nice, they want the kids to build credit. Maybe that's like 10% of the reason. But the main reason is because younger people tend to make poor financial decisions, right? So if you are a college student and you know nothing about finances, and you're like, wow, I could charge $1,000 on this card, and you're in college with all your friends, you're probably going to max out the card and pay the minimum payments and pay a ton of interest. So that's actually a really good point. Now, I don't think credit card companies are allowed on campuses anymore to solicit. Is that right? I think there was some sort of law passed. Hey, Paul, good to see you. This is, wow, surprisingly predatory. Now, here's the bad news, and not to sort of go off on too much of a tangent. The bad news is I read an article in the Financial Times. We may have talked about it, by the way, on the stream. You know what they're trying to do now on some college campuses? They're trying to set up very similar to what credit card companies did and what the banks did, like set up table days to sign kids up for credit cards. They're trying to do that same thing for like sports betting and gambling, like athletics gambling. Now, in my view, I think that is such a disservice to your students. And it really, really just shows the greed of these universities, right? The universities who are participating in this deal, right, to allow these companies to have access to their students, they're obviously getting paid off to do so. But when you're in college, you should use that time for your education. You're paying out the nose for it. You shouldn't be susceptible to, degenerate casino online gambling companies soliciting you. I don't know. That could be a hot take. That's just my take. That's my opinion. I'm against it, but I don't know. What do you guys think? Yeah, Cooking Bro says a lot of universities are really businesses, unfortunately. That's true. Julia M says pay to play for sure. Yogi, welcome. Good to see you. Yeah, Keith says let mom and dad make the payments. Hilarious. Hey, Andrew's here. SME Media, welcome. Thank you for joining us. Michael Anthony says banks have been having a pretty hard time the past 2 weeks. Indeed, they have. We'll see if they continue to have a hard time. J9 says, yes, someone signed me up for a credit card on campus in 2002, and I made many poor financial decisions. Wow. You see, that's what I'm talking about. So Dan makes a good point. You know, and I'm trying not to play the fence. I'm just trying to give both sides of the argument here. Now, do I think buy now, pay later is all horrible and predatory in nature? I don't. I think that it could pose for viable solutions, but just like anything, right, and everybody would probably agree with this, it can be abused, and unfortunately, if you actually look at the data, the people who take advantage of those programs the most are in very, I should say, financial vulnerable situations where the likelihood of them maybe missing a payment or being a couple days late is really high. So they would get banged with that interest charge. So I don't know, it'll be interesting to see how it comes out. I mean, Apple just announced this today. I didn't really have any time to read into the fine print, but I don't know. I don't really know what the interest will be. Hey, hang with Mark Mom. This is also with Apple Pay Later. They will finance up to $1,000. Oh, really? So they will do a soft credit pull, which will not affect your FICO score. But if you miss a payment, your FICO is dinged and banned from the program. Yikes. Yeah, I mean, I think it could be good for some people, potentially bad for others. So we're coming up, where are we now, everybody? We're walking to the east side on 42nd Street. This is actually the Pfizer World Headquarters here. I'll quickly show you guys right here. Pfizer World Headquarters on 42nd Street. Hey, Twitch ASMR, good to see ya. Mike sees his first sign them up for the credit card, then let them get cash advances to do the gambling. Yeah, it's insane. I don't know. I mean, for now, there's only, I think, a select few universities doing it. But again, like anything, it's a business, right? And I think anything in moderation is fine. If you want to gamble on, you know, basketball games, football games, whatever, I don't see anything wrong with that. I don't. You know, anything in moderation is fine. But unfortunately, if you're a college student, right, just think about back in the day when you were a college student. You were a little bit gullible and a little bit stupid. I know I was, right? You're 18 years old. You're just trying to figure things out. And unfortunately, online betting and gambling is very, very addictive in nature. And even more so now that it's literally on your phone. So you don't have to go to the casino anymore to gamble. You don't have to take a trip to Vegas. All you have to do is roll out over the side of your bed, pick up your iPhone, and you could be gambling tons of money away. And I think that's a really bad look for universities who partner up with these online casinos and allow them to market to their students. I think that's a huge disservice, but you know, we'll see. We'll see if that stops or not. All right, this is Pix 11 News. This is 2nd Avenue and 42nd Street. In the distance, you'll actually be able to see the Bank of America Tower, one Vanderbilt, and one of the best Art Deco buildings in New York, the Chrysler Building. Hey, Yes Forever 18 says opening bank or casino is a great business. Hey, D is here. What's up, D? Stylish Bunny, welcome. Kunar Bar says have my son at university. Have to look out for that. Thanks for the info. Yeah, so here's what I would do. I would Google, because there was a big story in the Financial Times. I think the Financial Times broke the story. It's only like a handful of colleges, so I don't want to freak everybody out saying it's everybody. But it's, you know, 2 or 3 is enough. Let's actually walk down a little bit more. Very, very seldom do we go all the way over to the east side, so I think it'll be nice to give you guys a little bit of a view of a different part of town in New York. But look, I think it's a good conversation to have. Yeah, Roberts is Tom. There is no moderation when you're a teenager, of course. Agreed. All right, I think that was a good conversation. Let's pivot here a little bit. Now, for those of you who are just joining, we did briefly mention... Oh, wait, hold that thought. Guys, look at this. Look at how cool this is. This looks new, but I'm not sure if it's new or not. It's like a whole... It looks like Central Park in there. Look at this atrium. Michael Scott says hello from Scranton, Pennsylvania. Good to see you. Hopefully sales are doing good. Now, for those of you who are just joining, Lululemon did report after the bell. And on Sunday night, during our stock market look-ahead live stream, we briefly talked about, how we could use Lululemon potentially as a proxy for the health of the consumer. Now, I would like to say this specific earnings report for Lululemon did include holiday sales. Okay, so I think that's important to notice, because anytime you have an earnings report, I'm getting distracted by these stairs here. I actually want to walk up those. I've never done that before. Let's do that. Anytime you have an earnings report that is inclusive of a major holiday, they tend to, get a little bit of a boost in sales. Now, what was encouraging to me is that forward guidance came in better than expectation, right? So if you look at EPS, or earnings per share, for the most recent quarter, they did beat Wall Street expectations on the bottom line. And on the top line revenue, they did beat as well. But they guided higher, which I think is why the stock is up. So maybe tomorrow night, when I have some time to really do a deep dive in the report, we'll take a look at that. But I think the biggest news for today, everybody, as we explore the upstairs here, I think this is going to be pretty cool, is S&P CoreLogic Case-Shiller home price index actually declined, or I should say the declining trend is continuing well into January. Now, we're going to do a deep dive into this, so I think it'll be appropriate for me to share the specific report with you guys. So if you type !SPC in the chat, the Nightbot will drop the link to the Case-Shiller report. Let's actually get to the top of here before we start. But you'll see, if you scroll down, I think it's table 2, you'll sort of see how bifurcated the market is, right? You essentially have the West Coast suffering significant declines, while the East Coast, not only in Miami, not only in Tampa, but Atlanta, New York, Boston, is actually holding up pretty well relative to our friends on the West Coast out in California. So this is Tudor City Place. I haven't been up here in such a long time. Look at this. This is a pretty cool view. Wow, what do you guys think? I haven't been up here probably since college. Check this out. Yeah, Ratfink, Washington State too. Seattle suffering pretty major declines as well. Now, being that this is 42nd Street, if you look all the way down, you'll pretty much be able to see into Times Square. You can see all the way across the city. Now, I think this is probably the best place to view the Manhattan Henge when that comes out. But here you can see One Vanderbilt, Chrysler Building. Yeah, Andrew says you should go to Murray Hill sometime. We definitely have to. But yeah, I think this was cool just to show you guys up here. Now, if you look across the water there, you'll actually be able to see Queens. Let me cross so I can show you guys, and then we'll get into the report. But I haven't been here in a while, too. It's kind of cool. You know what? If you look to the left, I think this is actually the United Nations. All the way on the east side. This is really nice. Now, if you continue to walk up First Avenue, you'll have the United Nations, and I think there's the two famous Trump condominiums. I think it actually is called Trump World Tower at the United Nations. Pretty cool. Look at this tourist bus coming here. Hey, Cindy Foley, good to see you. I think we have a little bit of a half moon out tonight. All right, let's head down. That was kind of cool. I haven't been up here in a long time.
Like, if you ever was your boss, I would have.
But I think the good news, depending on who you ask, is that home prices are finally starting to decline. And I think that's good overall. Now, if you were to ask me, well, Tom, do you think that cities on the East Coast like Boston, New York, Atlanta, Georgia. Atlanta was also another really strong market too, by the way. Miami and Tampa. Do you think they're going to suffer similar price declines as the West Coast? And I would say yes, but not as rapid. Not as rapid. I think the reason why you're seeing this staying power here, and it's actually quite contrary to what happened in the previous down cycle, right, in 2008. The housing market that really got hammered the most were places like Miami and Tampa. I think Miami was the number one individual market for declines, I think behind Phoenix, Arizona. And again, we sort of went into some potential reasons why you're seeing Miami and Tampa being so resilient. And I think it's because this time there's a lot less speculation. Right? There's still speculation in the housing market, but you're seeing a lot of jobs. You're seeing a lot of real companies and real good paying jobs moving to southern Florida, moving to cities like Atlanta. Look at how beautiful this is. So the people moving into those cities and buying condominiums and buying single family homes, they're probably families with good household incomes, good jobs in tech, good jobs in banking. Quite to the contrary of what it was leading up to 2008, right? So you could think about 2004 all the way to 2007. The vast majority of the buying in those niche markets like Tampa, Miami, Fort Lauderdale, you could probably even throw Phoenix, Arizona in there too, was people buying second and third homes, vacation homes, speculators, the flippers, right? House flippers. So also with, the C-19 virus, you've probably seen this huge exodus out of San Francisco, Silicon Valley, even San Diego, right? Where generally these places have been very expensive, even more expensive than New York, by the way. I think San Francisco did just beat New York in terms of the cost of living. If I'm a software engineer in Silicon Valley, or if I'm a software engineer in San Francisco, really any major city in California, even Seattle, if you want to talk about Washington, Seattle, Washington, why would I stay there when I could be just as productive working from any city, any state in the entire country I want to? Why wouldn't I move to the Midwest? Why wouldn't I move out east where things are a little bit less expensive in terms of cost of living? And oh, by the way, if I'm working in Texas, if I'm working in Florida, I don't have to pay any income taxes. So I think this has just really exacerbated the moves here. in the housing market, and I think that's why you're seeing a little bit more resiliency here. Michael Joseph says, I'm in New York City, so the skies are not clear here and too bright. Very nice. The LT Prods is 2008, was a balloon that popped. Now is a balloon that is difficult to deflate. Yeah, I mean, look, I'm still under the, I shouldn't say assumption, but I'm still under the thought that we're going to see some, further declines here. Especially if this trend for remote work continues. Hey, Des says, Raleigh is flooded. I saw both of my townhomes. Oh, you sold both of your townhomes in 6 weeks. Wow, to a couple from California. Wow. Yeah, Raleigh, the Carolinas are very, very strong markets too. Now, so S&P CoreLogic Case-Shiller U.S. National Home Price Index, covering all 9 U.S. Census divisions, reported a 3.8% annualized gain in January. That is down from the 5.6% gain in December. So you're starting to see these decelerations here on a month-over-month basis. But if you look at a 6-month rolling average, an interesting thing that we saw in January is that prices went down a little bit slower than they did in December and months prior. Now, what does this correlate to? And we've been talking about this almost to the point of ad nauseum. Real quick, I want to point out this hotel. This is the Westin. This is actually a really, really nice place. I've stayed here before. Really close proximity to Grand Central Station as well. Really good views. But this actually correlates with a very brief drop in interest rates in January. And as rates dropped, prices held steady, and people, I'm using air quotes here, people were like, oh, well, now this house and this mortgage is more affordable, right? Unfortunately, that's how a lot of people think. They think, I could afford this house because, interest rates are so low, so I could afford the payment. They really don't look at the valuation. You guys know me. You should really look at the valuation of the property. It doesn't really matter where rates are. You can get good deals in any markets, and you can get bad deals in any markets. But, in general, as rates go down, people are looking at, can I make the monthly payment, right? And as interest rates go down, generally speaking, your monthly payment also will be a lot lower. Now, it's interesting because if you look today, right, so if you go to cnbc.com/bonds, once again, cnbc.com/bonds, and you look at the 30-year fixed rate mortgage, the average as of doing this video is 6.6%, so 6.60. That's significantly lower than where we were just 2 weeks ago, when the average 30-year fixed was well over 7%, right at 7.25. Hey, JM says, check it out, Tom. 1,050 people watching. Wow, that's insanity. Thank you so much for watching. Also, guys, I forgot. I think we surpassed 29,000 people that are tuned in to the channel, which is just mind-blowing to me. But it's pretty cool. So I want to thank all of you for being so disciplined to show up to these streams every night. Really means a lot. I have a lot of fun doing them. Man, 29,000 people. That's insane. I think that's a little bit more than the capacity of Madison Square Garden. So thank you for that. Hang with Mark Mom says, yep, 6.8%. That's what I was quoted by a lender today. Yeah, I mean, so now the question is, and maybe, since Hang with Mark Mom is actually in the market of buying a piece of property, is that going to spur more buying activity? Or are people still in a little bit of shell shock from the, banking crisis that we're going through currently, right, with Silicon Valley Bank, with Silvergate, and the like, and maybe even more contagion on the way, who knows? Hey, Jenny Trick, it says, Tom, I'm headed to Phoenix tomorrow. Forgot to post after you mentioned real estate. Well, please let us know what's going on there. Ryan Beck says, I think people will pull the trigger, especially if they can get the sellers to pay closing costs, rate buydowns, etc. Says Ryan Beck. Yeah, well, that's a good point. Now, I want to give you guys a little bit of an insight since Ryan Beck said that. I'm going to give you a little bit of insight into the New York City real estate market and what I'm seeing here. Now, notice what Ryan said, right? Paying down your points and other different things, right? Like the seller paying the closing costs to try to get the deal done. One thing I'm seeing in new development, now select new development here in New York, if you are looking for, let's just say an apartment, right? Or you want to purchase a block of apartments in a new development unit and use it as an investment, many of these new developers, or I should say these units, are really willing to negotiate. And here's why I say that. I was doing some research the other day on some new projects that just opened that have high vacancy, or they're trying to move the units. Here's some of the, I should say, incentives that I'm seeing. I think the most aggressive thing that I saw is about 2 years of common charges paid for. I think it was 12 to 24 months of common charges paid for by the sponsor. I'll let these guys walk a little bit. And that's pretty significant, right? Because if you think about a lot of these new developments here in New York, I mean, you could be paying, $500, $600, sometimes even more, like $1,000, depending on the unit and depending on the square footage of the apartment, in just monthly common charges per month. So, I mean, that's no, drop in the bucket. That could be of, $24,000 worth of value over 2 years. So, I think my advice would be, look, looking at the leading economic indicators, right, that we've been covering pretty much every single stream for the past year, they're all saying that this market is fundamentally changing from a seller's market to a buyer's market. So having the knowledge of all of those leading economic indicators, like the one we got out today, S&P CoreLogic Case-Shiller Index, showing that prices are rolling over and declining. If you look at the National Association of Realtors, that reported 2 weeks ago now, existing home sales, 12 months in a row, have been continuing to decline. It was only 1 month that we broke the trend, and that is because prices are coming down. So if you are in the market to buy something, I think you have more leverage than you've probably had over the past 3 years. I think that goes without saying. So I think you should be trying to negotiate and get every little thing that you can, right? If that's, let's say if you're buying new home, right, from one of these home builders, see if they could pay down some of the points on your mortgage. See if they can throw in additional upgrades or new appliances, or even see if they can cut the cost, right, to get the deal done. If you listen to some of these earnings reports, Toll Brothers, just to give you one example, pretty much all of the major home builders, by the way, KB Home and the like, it's so important to listen to these earnings reports because the CFO and the CEO literally are telling you that they're doing things to move product, right? They're giving different incentives. They're offering extended warranties. So if you're a buyer, use that to your advantage and really, really negotiate these deals. Hey, Greg says real estate is local, of course, suburbs in California down, but Westchester County, New York, zip, still. Do you mean Westchester's still up? Is that what you mean? Yeah, but Greg, to your point, you're right. So again, if you look at the report, let's go to, I think it's table 2. I actually have it in front of me. If you look at table 2, let's look at New York. On a year-over-year basis, so a 1 year change, New York real estate's actually up 5.2%. It's only on a month-over-month basis that New York is down about 0.3%. So again, it's so interesting, and this is why I think you guys should really look at this visually. So again, if you type !SPC in the chat, it'll actually drop the PDF link and you could look at it. You're seeing this total division in the housing market, right, between the West Coast and the East Coast, where West Coast cities are really taking the majority of the beating, specifically San Francisco, San Diego, and Seattle. They're getting hammered. Quite the opposite for the East Coast, right? Atlanta is holding strong. Boston is holding relatively strong. The two strongest, right, at least for now, never say never, but the two strongest, at least for now, is Miami and Tampa, Florida, both on a year-over-year basis and on monthly basis as well. I think Miami, if I'm looking at it right here, on a year-over-year basis, still up 13.8%. However, on a month-over-month basis, we're starting to see those declines, which we've expected. I mean, prices can't go up forever. We have a 0.3% decline. Who has the highest month-over-month decline? I think it was San Francisco, right? Yeah, San Francisco has a 1.8% month-over-month decline. Think about that. So, if prices continue to fall at the rate they're falling in some of these cities on the West Coast, I mean, I think that could be a pretty amazing opportunity. Because I think it's pretty irrational to say, and I'm not from the West Coast, right? I'm from New York. But if you think about a city like San Francisco, if you think about a city like San Diego, I mean, are you really saying that these cities are not going to recover in 5 to 7 years? There's no shot. There's no shot. They will recover. At least that's what I would bet, right? And I'm very unfamiliar with those markets. And I'll tell you why I'd bet that. I'll tell you why. Because if anybody remembers, we were actually doing these live streams during the pandemic. And the streams were very, very different than what they are now. Let's just say that, to say the least. You see people, I think it's like 10 o'clock at night, you see people walking around. Midtown Manhattan was packed today. Rents are at pretty much all-time record highs in New York. But you guys should have seen the comment section, okay? You should have seen the comment section during the pandemic. Everybody's like, New York City's dead, it's never coming back. Sell now, get out. And that was the dead bottom. And New York has actually recovered, and then some in terms of rents. Now, there's still some very localized markets that, have not, should say, recovered with as much force as, let's say, Manhattan or Nassau County, right? New York is a very, very big place. Now, I just talk about New York City a lot because that's where I am, right? But New York State as a state is massive, right? You have upstate New York with Buffalo, Rochester, Syracuse, which surprisingly, Buffalo actually posted pretty good numbers today. But I don't know. Let's hear from some people from California, right? From San Francisco, from San Diego, right? From LA, where you've seen these price declines. Now, yes, I understand there's some problems in San Francisco with the homeless people, with the drugs, and all of that. But are we just going to be under the assumption that that's going to stay like that forever? I don't know. I really don't think so. Now, usually when there's blood in the water, that's the biggest opportunity. I have a really hard time sort of accepting that all of the tech innovation, all the entrepreneurs are just going to leave San Francisco forever and set up shop 100% in Miami. And that's coming from a person who owns real estate in Miami, Florida. I think you're going to see people come back. I think you're going to see a recovery in San Francisco. Maybe it's going to take 3 to 5 years, but I think it'll recover. I don't know. What do you guys think? You guys think it's totally done down there or what? Oh, this is the brand new JPMorgan Chase office tower. I'll cross here just because I have the light, and then I'll catch up on some of the comments because I want to know what you guys think about this. Hey, Lady Rose. Okay, we have someone from San Diego. Let's see. All right, Lady Rose. Let's see what you got. So San Diego here. My next door neighbor was trying to sell his home for over $500,000, but never got any offers. Wow, no offers. Well, Lady Rose, what are the comps in your neighborhood in San Diego? Well, that's a good piece of data, and your data point aligns exactly. I would say your piece of anecdotal data aligns perfectly with the concrete data we got out today. The big bloop boy says the dust always settles. Hey, SoCal Lawrence says, yeah, here in California rents are still high. Rat Fink says a number of significant businesses have left San Francisco. I don't see a turnaround soon. Sabrina Fair says San Francisco won't recover for a long time. The crime is out of control. Michael Joseph says, you ever see Detroit? Detroit, Tom, some of it never came back. That's actually a really good point. Kurt Flirt too, so seems like it. They are even trying to change what they need to change, though. Okay, the people in power, I gotcha. B Cruz is never going to happen. People love San Francisco too much. Yeah, I don't know. And again, maybe I'm not going to get too far in over my skis here. I've never been to San Francisco. But I know a lot of people who are, startup founders. And that has pretty much been the bedrock, or one of the main places that's been the bedrock of innovation for the United States. Now, yes, I understand the crime is out of control in San Francisco. The homelessness is out of control, and it's horrible. But I have a feeling we're probably going to find a solution for it, because people are either, well, they have gotten fed up, right? People have gotten fed up and they voted with their feet. They're leaving. So I think local politicians are probably going to realize that, and the people who are still left are probably going to figure something out to change it. Hey, 45, what's up? Says Southern California is soaked with sun, therefore it will recover soon, in my opinion. Yeah, we'll see.
Yeah, I'm not used to that.
45, good to see you. 45 is joining us from our good old friends, neighbors to the north in Canada. Lululemon reported earnings, by the way. Canadian company. Reported a good quarter. Hey, Bob P says New York City has had its ups and downs for the past 60 years. Plus, it always comes back when crime goes down and struggles in high crime times. It will return, of course, again. It's all about lowering the crime. Yeah, I agree totally. Because at the end of the day, I think New York is a very, very unique place. Now, if you want to talk about prices, prices have recovered from the pandemic. Now, there's some localized areas and markets where it hasn't, but generally Manhattan especially, it's recovered. As expected, I expected that. But New York City is generally a place where people want to live, right? People want to come here. From all over the world, by the way. It's sort of very humbling sometimes when I get emails from people. They watch the stream from other parts of the world, and they're like, hey, I've never been to New York City in my life. I'm saving up, all of my money, working, a couple of jobs just so I could visit the city one time, right? And so oftentimes I could think, I kind of take the city for granted since I'm here. But, there's still this stigma about New York that there's people from all over the world that would do anything just to come here and live in, a 300 square foot, pretty much closet studio. And I think that's going to continue. I don't think that's ever going to go away. Now, yeah, you may have, people living, I should say in by city, where you have New York and Miami splitting your time, but I don't think it's ever going to go away 100%. It's just not possible. Hey, Hang with Mark Mom says, I yearn to return to New York City just for a visit. Ryan Beck says, we'll see if they are fed up. If they vote different, I'd say chances are slim to none. I mean, we'll see. It just, to me, it's very, very hard to believe that a place like San Francisco is just going to go by the way of like Detroit. I think Michael Joseph used that term. It may take a couple of years, but I think it'll bounce back. Hey, Meg Lowe, thank you so much, Meg, for your very kind $10 donation. Thank you for supporting the channel. We appreciate it very, very much. Now, Meg, we're right by the Diamond District. You see these main two little street lights here that are shaped like diamonds? That's how you know you're in New York City's Diamond District. We'll cross here. I'll show you. I'll actually give you guys a little bit of a walking tour down New York City's Diamond District. You could see some of the bullion dealers. You know, a lot of gold, a lot of silver is traded here. Speaking about gold, over the past few months even, gold has been very, very strong. Now, last week we briefly traded above $2,000 an ounce, very briefly. Now we're back below. I think we're trading at $19.70 an ounce, right? All right, we'll pull off to the side so you guys can see. But Meg Lowe, thank you so much. Justin S. says the desirable climate of California will help the cities bounce back once they clean up their situation. Yeah, that's sort of my thesis as well. And with any downturn, right? Now, I think it's appropriate to say, yes, is the crime and the dirtiness one of the reasons why a lot of those cities on the West Coast are seeing price declines? I would say yes, right? But we're also going through a major business cycle change, right? And in a normal business cycle, like this is just par for the course. Like this is normal behavior. And when a business cycle changes, or I should say goes through transition, I'll quickly show you guys some of the jewelry stores here. Interest rates go up, right? So the Federal Reserve has now raised rates literally almost 500 basis points. Last week, we heard from the Federal Reserve. We had the FOMC meeting where they did raise 25 basis points, bringing the Fed funds target rate to 4.75 to 5%, right? So naturally, what you want to be doing historically is selling into that strength, or selling real estate. Now, again, this is a very general basis. Selling real estate when rates are low, right? Because technically you have higher valuations, and buying and finding really good deals as rates move up and rates are high. So I think some cities in California, and right, not to seem like I'm dumping on California, I want to show you guys this bullion exchange here. Let's see if they have any live prices. It's a double whammy, right? You have potentially, a lot of people don't like the politics of it. It's dirty. It's not safe. In some places, right? I'm generalizing, but you also have interest rates going up, and historically, it's been a very, very expensive place to live. So naturally, prices are coming down. But in any cycle, that creates massive opportunities. All right, let's see. So gold is $19.68. Silver is $23 an ounce. Platinum, wow, platinum's almost $1,000 an ounce. Palladium. Look at this, roll of 20, 2023 1 ounce gold American Eagles. $41,000 for a roll of 20. Very cool. Now, I have a very, very, it's not even like a position. It's a very small piece of physical silver. It was actually gifted to me, which I appreciate very much. It's very cool. But I don't really own precious metals. I don't know. What about you guys? Hey, Sparks Carnival, thank you so much. Thank you for all of your input to the channel, and enjoy the rest of your night. Thanks for coming. Hey, Mike and Lizzie says, my wife has been trying to convince me to consider moving to Northern California, but everything I hear about there is natural disasters, fires, floods, blizzards, etc. That's who said that? Let me see. Mike and Lizzie. So what's interesting? Is that possibly another factor why people are moving out of California? Because Here's something that's so freaking crazy, okay? Especially if you take a place like LA. It seems like just a year ago, I would turn on the news, right? If any news channel, right? Any mainstream news channel, front page of the Wall Street Journal, wildfires, severe drought, extreme, like it was such a problem, these droughts out in California, that there was actual government officials thinking about and brainstorming ways where we could bring fresh water from the East Coast to the West Coast because it was such a big problem. Well, fast forward 1 year, we have the exact opposite. Now, LA is getting hammered with rain. It's been raining like almost every single day there. It's so crazy how things have sort of transpired there. So for the people who may be watching the stream from LA, from parts of California that are getting hammered by all of this rain, it's very possible that, well, one of the many reasons why people were leaving California was due to the droughts, right? I don't want to live in this state anymore. You know, my insurance is going up because, you know, maybe the insurance company even dropped my policy because my house was susceptible to wildfire. So I sold my house, I picked up and I moved to Atlanta, and now, you know, we're getting rain every single day. So it's just so strange how things are working out. Hey, Mike C says my in-laws' power gets shut off 2 to 3 times a month. Really? Half the year in the mountains near Sacramento? Why? Why is that, Mike? Yeah, you know, I even saw something where California is now having to release some of the fresh water back into the ocean because they don't even know what to do with it. Hey, Tariq Khan, what's up? Good to see you, Tariq. Thanks for joining us. We are now standing on 6th and a Half Avenue. We're going to walk up by Radio City Music Hall. Now, funny enough, you actually see UBS right here. UBS purchased Credit Suisse for about $3.6 billion. Hey, buy the book. Good to see you, buy the book. Austin City Limits is drought no more for sure. Let me just catch up on some of the comments. Yeah, buy the book. I agree. People are leaving California due to the taxes, homelessness as well. Shadow Stock, what's up, my friends? Says own 1 ounce gold coins in a safety deposit box. Excellent price appreciation over the years. Well, congratulations on that trade. That's awesome. Now, the only gold I own, Shadow Stock, and you're not going to like this, better cover your ears, is the digital gold. I own Bitcoin. I do not own the physical gold. But I will say this, and I've posted about this on Twitter, by the way. Gold is carving out the largest cup with handle pattern I have ever seen in my life. So if you pull up a chart of gold on TradingView, MarketSmith, Bloomberg, go to a monthly time frame and look at the historical price movements in gold. You usually have massive price appreciation in these major super cycles, and then you have about a decade or so of sideways to down price action. That's what we've had. I think gold topped in what, 2011, right? 2011, 2012, and we've been going sideways ever since. Now, I will be putting on a position in gold if we crack all-time highs, which I think is $2,070 an ounce, right around there, maybe a little less. But I mean, not just going off the technicals, but I think it's important for the technicals to corroborate with the fundamentals. And you can't get a better fundamental story, you know, in my view, for buying gold into new all-time record highs than what you have right now. And this isn't investing advice, by the way. This is just we're having a conversation. You're in a world where you're stuck between a rock and a hard place, because if central banks continue to tighten, right, suck liquidity out of the system, there's going to be more contagion. There's going to be more banks that fail. There's going to be more companies that fail, and we could very well be pushed into recession. Historically, that is very, very good for gold. Now, if we want to try to avoid a recession and kick the can down the road and turn back on the money printers, well, that's going to essentially signal to the market that Federal Reserve Chairman Jerome Powell is going to let inflation rip through the country, which is also very bullish for, you guessed it, gold. Now, I'm not saying that's going to happen, but I'm saying if we break record highs on significant volume, that is a circumstance where you have, a technical setup with a fundamental story, a fundamental thesis. This is Radio City Music Hall right across the street here. It's nice, the gold is at a bank, so I can't just sell, you're forced to hold. Now, shadow stock, I think my thesis, and again, gold is probably a great hold, I get that. I'll probably be fractional reserve banking and fractional reserve lending system is Bill Ackman has been Twitter fingering away and freaking out. But I think he's overdoing it. I think that opens the door for a new asset class that you could hold your own private keys and self-custody your own wealth, which I think Bitcoin has those properties. Again, gold, if I'm carrying around it, let's say if you have $80,000 worth of gold in a bank or a safety deposit box. Now, yeah, in theory, what if something really bad happens and the banks don't let you pull your stuff out? Maybe that's too much of an Armageddon scenario, but maybe just having an allocation to Bitcoin is some sort of a put option on a global societal collapse. I think more investors are going to be willing to have like a 1% or even a 0.5% allocation to something that they could self-custody, right? You have your own private keys. If you memorize your own private keys, you can hold that value, right? You can transact it without any sort of permission, right? You don't have to go to the bank and say, hey, I'm going to wire $10,000 or $20,000 to this account, and they're asking you 50 million questions. So I don't know. I think there's going to be a seat at the table for both. That's not the building. This is it. This is Nürburger Berman. This is 1290 Avenue of the Americas. Hey, Teresa Diaz, thank you so much. Oh, wow, it's already 10:15. JM says, yeah, but we all still stuck around back in the day regardless of the floods, fires, earthquakes, etc. That's true. Oh yeah, neighborhood, for whatever reason, we start to buffer a little bit. Tappy Arrow. Anybody? Dan Tapiaro actually got his start trading under Stanley Druckenmiller. And obviously Stan Druckenmiller is probably one of the greatest traders / investors of our time, where he got back in the day. And we all know George Soros, his famous trade. And Dan Tapiaro sort of says this. He's like, there's always this constant bickering and fighting about what's better, gold or Bitcoin. But he thinks that both have a seat at the table, right? Where as the economy and as the banking system becomes more and more unstable, oh, are we still buffering again? Let me try to, let me walk up a couple more blocks, because usually we have some issues around this neighborhood. Maybe we'll make a left. We're back now? Okay. Yeah, usually Radio City, Rockefeller Center usually tends to have more buffering because of the tourist activity. But anyway, what I was saying is Dan Tapiero got his start trading under Stanley Druckenmiller, one of the greatest traders of all time. Obviously, Stan Druckenmiller got his start trading under pretty much the most successful trader of all time, George Soros. And what Dan Tapiero says is that both will probably have a seat at the table, right? You're seeing this trend of central banks loading up on gold, right? Record purchases by the central banks. But again, the problem is there has to be someone that you need to trust, right? You need a custodian, somebody to have custody of your gold, right? If you're an institution, family office, or something like that, or even an ultra high net worth individual, if you get up there to have, multi-million-dollar worth of gold, you're probably not going to have that sitting under your bed, right? You're going to have somebody custody that for you, which is a layer of trust. And as you add layers of trust, this is 6th and a half Avenue. And as you add layers of trust, you add layers of risk. So I think people, investors, both small, both retail and institution, even major companies, are probably going to start not having crazy allocations, but maybe just a 0.5%, or even 1% allocation to a digital asset like Bitcoin, where you could self-custody, and as long as you write down your private keys, you have full autonomous control on how you store, on how you transact, and it's permissionless. It's a peer-to-peer network. It is totally permissionless. So I think that's a value proposition, especially sort of what you're seeing now. I mean, think about, war-torn Eastern Europe. Try moving money out of Russia in the traditional banking system now. You can't do it, right? Try moving money out of some of the war-torn countries, outside of Eastern Europe. You can't really do it. So I think that thesis is still in play. And, I think gold is going to perform well. And I think Bitcoin will also perform well in addition to that. Yeah, shadow stocks, as I agree, self-custody is the only way to go on Bitcoin. Now, shadow stock, I agree with you. And this is when a lot of the crypto people get upset with me. And the reason why I say that, but real quick, this is Barclays. This actually used to be Lehman Brothers. This is the Barclays Investment Bank, which is a British bank. But in my view, if you are buying Bitcoin to leave it on Coinbase or another exchange, you sort of just violated the really only value proposition of Bitcoin, right? In a way, right? So as during my college years, I did a lot of studying and analysis of Bitcoin, and I'm like, okay, well that is, and I'm trying to figure out what a value proposition would be, and the only value proposition I could see is an unconfiscatable medium of transaction, right? Maybe you couldn't even say unconfiscatable store of value because the thing is so volatile. So maybe I would even refine that definition perhaps a little bit more to say an unconfiscatable medium of transaction, right? So if the banking system is on the rails, like it has been and it still is, it doesn't matter if, let's say BTC goes down 10%. You still can transact something. you still can participate in commerce because you're essentially have something outside of the traditional financial system that is unconfiscatable. So I think the people who are purchasing, and this is why I think the whole crypto thing has sort of gotten hijacked in a way, is because I think a lot of the other projects, right, like the alternative coins, are sort of just like a grift train in a way, right, where people use it to do illegal activities. They use it to, in my view, solicit essentially securities, which the SEC has now really come to crack down on that. But yeah, I agree. I think there is real value in having a medium of exchange that is permissionless and unconfiscatable. Hey, the Mighty Bull is here. Good to see you. Meg Lowe says, Tom, I'm from San Diego. Very expensive to live here. You know, speaking of San Diego, man, it's so windy here in Manhattan now again. I think with San Diego State is in the Final Four, right? For basketball, as well as the University of Miami. University of Miami, the first time in school history, first time in college history that we made it to the Final Four. So congratulations to the University of Miami. Hey, Derek says, hey, Tom, I hope your week off is to a good start. Oh, is off to a good start. Thank you so much. I'll be in New York City on April 8th for the New York City Auto Show. Hey, that's awesome, man. Now, it's so crazy because I'm actually going to be flying back to Miami that week. So I'll be back for about a week. Looks like there's a show coming out of Carnegie Hall. So I'm flying back, when am I flying back? The 31st, March 31st, and I'll be there for about a week. But that's awesome, man. Enjoy the auto show. And thank you for joining the chat. Classy is here, says good evening. Now, this is Carnegie Hall. And I can't wait until they take down all of the scaffolding. Obviously, they're doing some major renovations and major repairs on the outside of Carnegie Hall here, 881 7th Avenue. But there looks to be a major event that's just getting out. Very cool. Hey, Jen Fleming says, hey, how far are you from Stone Street in Lower Manhattan? I love that place. We are probably the furthest you could possibly be from Stone Street. So Stone Street is down in Lower Manhattan. I used to work very close by when I worked down on Wall Street. My office was 82 Wall Street. But Stone Street's a great place. A lot of history down there, very fun. Not too fun during the winter because it's very windy. If you think it's windy here at 57th Street, down there is crazy. But yeah, maybe we'll go to Stone Street on Thursday night. But thank you so much for joining us. I think this guy may have been going the wrong way. All right, everybody, so we are now on 57th Street, New York City's Billionaires Row. Hey, the Wounded Avatar says Coinbase will allow your beneficiary to claim the crypto if the unfortunate happens. I don't think a hard wallet has the capability. I could be wrong. That is true, but again, I think that just goes back to the value proposition of Bitcoin again, right? I think really the only way that it has value is if you completely operate outside of a traditional banking system. So you don't, again, that goes back to the permissions, right? So if you unfortunately pass away and you don't give somebody your private keys, well, then yeah, the Bitcoin is lost forever. That is true. But at the end of the day, I think you shouldn't be buying Bitcoin unless you want to sort of have a put option essentially against the system, right? So that means you need to take full autonomous control over your custody and only share your private keys with whoever you want to share it with, right? It's not like you have a beneficiary to your 401k or IRA. But it's a good point, right? I mean, I think, if Coinbase came to me and said, hey, Tom, put your Bitcoin on, Coinbase because, unfortunately, if you pass away, we'll just give it to your parents. Well, I'm like, well, then why wouldn't I just buy, the S&P 500 or gold in a retirement account and do that? Like, why do I need Bitcoin? I think the only purpose of Bitcoin is to operate outside the system in an event something crazy happens. But maybe that's just my opinion. All right, we'll give you guys one more shot of Carnegie Hall. Can't wait till all the scaffolding's down so you guys could actually see what it looks like. I think since we started doing the live streams, the viewers have never actually physically seen the real building of Carnegie Hall. It's been covered up by this, I shouldn't say ugly scaffolding, at least they tried to make it look a little bit nice. Hey, Steph UH, what's up? Good to see you. Let me catch up on some of the comments. I think my chat is stuck. Hey, Bernard Conte, good evening, welcome. Well, let me try to I think my chat is glitching out. All right, there we go, we're back. Yeah, so I'm seeing a lot of comments. I guess I'll just read one of them. There's a lot of double comments about, well, yeah, so I think in essence, what I'm trying to say is if you want to reach and find a value proposition of it, right? Because, we were talking about gold and saying, well, why should I have an allocation to Bitcoin if I could just buy gold? Which generally I would agree, but if you were to ask me, okay, what is the value proposition of Bitcoin? That's the only thing I could come up with, is just being able to have an asset outside of the financial system to self-custody. So you don't have to have anybody essentially responsible for your wealth, right? Now, as of right now, I would leave that allocation to an extremely, extremely small portion, right? Again, like I said, it's sort of just like a put option on the system, which actually came in handy, by the way, when Silicon Valley Bank collapsed. I actually knew a lot of startup founders that had pretty much all of their money in that bank. Now, they got bailed out. We won't have that argument of if they should or if they shouldn't have. We had that over 2 weeks ago ad nauseum. It was a really good conversation. But in that instance, right, let's say if you had, maybe 1%, 2% of the corporate treasury, or 1% or 2% of the balance sheet in Bitcoin, the bank collapsed, and even though you're probably going to get about 60 to 70% of your money back anyway, if the FDIC program was allowed to play out, the reason why it wasn't allowed to play out is because it would have sparked bank runs and the like, but we could debate that. You would have at least something to be able to operate, pay expenses, make payroll, things like that. I think it's just an additional way of diversity, not adversity. I was looking at this BMW that almost got knocked off by this uptown MTA bus. I'm not sure if you guys saw that. Hey, Bill Rollings, good to see you. Welcome. Mike C says, Tom, what's your take on the state of Charles Schwab? Well, here's the thing. There's a lot of, especially if you're on Twitter, right? There's a lot of people. Now, I want to be very choice with my words here. In my opinion, there's a lot of people that are trying to engagement farm on this sort of existential banking crisis we have, this bank run, right? By, posting, charts of, the credit default swaps on Charles Schwab and Deutsche Bank are going up. When, they really, if you understand credit default swaps, it's not like a very liquid market. So of course you could, well, I won't get too far into it. The point I'm trying to make is, again, our system is a fractional reserve based system that is built on trust. Bank runs can happen at any time, right? With Silicon Valley Bank, for example, you had $44 billion worth of outflows in 24 hours. No bank in the world could have withstood that. No bank in the world. Now, granted, yes, they had a ton of duration risk. They loaded up about $90 billion worth of MBS, mortgage-backed securities, 10-year duration, yielding 1.5%. I understand all that. All that is great. But every bank in the world, maybe not to the extent of Silicon Valley Bank, but is loaded up with this stuff. Because we've been living in a world like 14 years of ZIRP, zero interest rate policy. So if you're buying bonds at different maturities, the yields are pretty much going to be nothing anyway, assuming you hold them to maturity. Now, where you get a lot of panic is when people say, "Oh my God, if Silicon Valley Bank is going under, that means my bank is going to go under," and they rip their money out and they make the problem worse. So that's sort of where I sit. So one of my main accounts, right, where I run my long-short portfolio is Charles Schwab. Am I going to move it out? Am I going to move it around and freak people out? No, I'm not. Could there be problems? Possibly, right? But that's sort of the risk you take. But I don't think that, and there's a lot of big accounts out there that are posting things like, "Oh, this bank is next, that bank is next, this is next." I think I'm all for freedom of speech, but again, the reality is this, everybody. I don't think the average American truly understands the way our banking system works, right? We live in a fractional reserve banking and lending world. Now, I forget what the famous quote was. Does anybody remember this famous quote? Is that if the average person understood the way our financial system works, there'd be a revolution by tomorrow. Was that Henry Ford? I forget who said that. But anyway, that's in relation to this fractional reserve lending system. And I think now people are just starting to learn about how it works. They're like, wait, when I deposit money in my bank, the money's actually not there? Well, of course not, right? If I deposit $250,000 into my JPMorgan Chase business account, the money it's not there. It's just digits on a screen. What the bank does is they go out and take your money and make loans on your money to generate yield and have a profitable bank. That's what banking is. So bank runs can happen at any time. I'm not trying to take any sort of responsibility away from the management of Silicon Valley Bank. I think there was egregious, management by Silicon Valley Bank and many others, horrible. But the after effects of that, what you're seeing now with other regional banks that have huge exposure to, the real estate market, mortgage-backed securities with these long-term durations, right, and low yield, everybody does, right? Because look, the Federal Reserve has raised rates nearly 500 basis points over the course of a year. So if you were buying bonds in 2021, when the Fed funds rate was literally zero, right, or close to it, you're going to have change in realized values of these bonds. So I guess the point I'm trying to make, without having too long of a winded answer here, is that the SBV situation not only exposed or got more people paying attention to how this works, but it's created an environment where people are very freaked out and spooked, and that makes the problem worse, right? Because if let's say if everybody raids, First Republic Bank, for example, which is actually one of the banks that was in trouble, they rip all their money out. Well, of course, they're going to have really a ton of problems, because if you want to meet the deposit, you have to sell your assets. It's a forced sale of your assets on the balance sheet. And again, what did we just talk about? Those assets, the value of those assets, their realized value, right, the mark-to-market value is maybe 40 cents, 50 cents on the dollar, because bond yields have moved up so much. So, I don't know, that was a really long-winded tangent about it, but I'm not moving any of my money around. I think that makes the problem worse. Now, maybe some of you would disagree with me, but I don't know. I can only do what I'm going to do. Joseph Hardaway, how do you feel about the acquisition of SBV by Citizens Bank? Well, do I think there's value there? Maybe. I'm more actually interested in the acquisition of Credit Suisse by UBS. I think that one is more interesting to me. We'll see how that plays out. At least there's no problems yet. But yeah, I know. Mike C says it's eerie how we walk by First Republic right after this topic comes up. Yeah. But again, that's what a bank run is, right? And when everybody, and I do think, and I want your guys' opinion on this, I do think social media, specifically Twitter, right? Because I've always said Twitter has a lot of valuable information on it if you hang around the right places of Twitter, like real estate Twitter, financial Twitter, tech Twitter. And there's a lot of very big, heavy hitter VCs on the platform. So when you have some of the top venture capitalists out there sending out a tweet, telling people to pull money from Silicon Valley Bank, or telling people to pull money from XYZ Bank, that freaks a lot of people out. So, I mean, even the age of the internet, age of social media, really exacerbates these problems, right? I even think, just do a comparison between Washington Mutual, right, the amount of withdrawals there and the amount of withdrawals from Silicon Valley Bank on a 24-hour time frame. It was just like unbelievable. And here's another thing I'd like to say while we're at 432 Park Avenue. A bank run doesn't mean people line up at the banks. Right? That's why I thought it was so funny, because the media is so ridiculous and they're so hyperbolic and they're so cringe that they sent like news crews out to Silicon Valley Bank branches. They sent news crews out to First Republic Bank branches just to freak people out. They didn't do it to actually report on things. I mean, guys, we got to be honest. You kidding me? Dude, banking is all on your smartphone. It's all in the palm of your hand. That makes the bank run even worse, because I don't need to actually go to my physical bank teller anymore. All I do is I roll out of bed at 7 o'clock in the morning. I read a scary tweet that the banks are going to fail. Then I log into my, Charles Schwab account or whatever account, my Chase Manhattan Bank account, and I rip all my money out in a click of a button. Right? That also exacerbates the problem. It's not. I know some founders, a very, very few people, were actually going to the physical bank. But guys, you could just do online banking and rip all your money out in 3 seconds. I mean, I could have a wire out tonight for my entire JPMorgan Chase account to any bank I want, while doing the live stream. Anyway, guys, we are now at Park Avenue. This is 425 Park. This is one of my favorite commercial real estate developments in the city. Hey, Ryan Beck says, the worst fear monger is the mainstream media. Social media might get the blame, but it's your news every day. Yeah, I agree. And look, I don't mean to be too sort of facetious about it, but at the end of the day, I think you got to sort of tread very carefully when you're dealing with a bank run. And again, it's not to take away, there was so much egregious behavior by the management of Silicon Valley Bank. I think the contagion, in my view, right, more along the lines of the contagion to the other regional banks. Yes, I understand everything about the bonds and the duration risk. I get that. But I think I think we'd be lying if we didn't say that it was just fear-based, the additional contagion, and people, freaking out about it. Look, I could be wrong, but hey, Bree Grams, have a very good night. Thank you for joining us. I appreciate it. Oh, Ryan Beck says, looks like Asia is rallying, Hang Seng up 2%. Yeah, so China opens 1 hour later now, right? I think Dan Zhang said. Hey, Joseph Hardaway says, I can't remember the last time I went to an ATM. Me too. This is the Ferrari dealership, very conveniently placed on Park Avenue. Yeah, little Larry Sellers is absolutely and never have to leave your bed. Yeah, most of the, you can send a wire out for millions and millions of dollars from your banking application. You don't need to go to the physical bank. Hey, Zozo Bob, what's up? This is Tom. Repealing the Glass-Steagall Act provision led to the 2008 banking crisis. I think that and a lot of other things as well. But good point. Zozo Bob, thank you for joining us. Appreciate it. Wow, we've almost been streaming for 2 hours. Time flies. But if you guys have been enjoying the live stream so far, feel free to leave a like on the video and click the subscribe button if you're new. Share the show with your friends. We usually do these streams at 8:30 p.m. Eastern Time, live from New York or Miami, depending on where we are for that day. I do want to take you guys to my favorite building in all New York City, which is the Seagram building. It's one of my favorite buildings on Park Avenue, located at East 53rd Street and Park. Jeff W277 says, Tom, that's why the pandemic PPP ran out of money so fast. All business owners had to do to get money was fill out a website, not go to the government office like they would have in previous crises. That's a really good point. And think about, now, does anybody remember, we had a stream about all of the PPP loans. Anybody remember that? And one of our major predictions was that this was going to be a disaster. Now, it's easy to play, Monday morning quarterback about it. And I think the PPP loans actually helped out a lot of people. However, unfortunately, you always have opportunists that try to defraud the system. And what we're seeing right now is a huge chunk of all of those pandemic loans were actually fraudulent. And the government, rightfully so, is going after a lot of people that were taking out PPP loans when they shouldn't, and I think that was extremely, extremely unethical. I think a lot of people are actually going to probably face jail time for that. But again, look, that was another rushed solution. I even would argue that, the Silicon Valley Bank solution was a rushed solution. But again, Treasury Secretary Janet Yellen, Fed Chair Jerome Powell, you had 48 hours to deal with it, right? So it's easy to say, oh, they came up with a horrible solution. They had 48 hours. So I think there's some similarities there for sure. Hawaii says, oh yeah, Tom, tons of fraud with the PPP loans. Which is really sad, by the way. I mean, that's, talk about, I mean, not to be too aggressive here, but you must have to be like a ridiculous sociopathic, psychotic person to defraud the PPP program when that money was supposed to go to businesses, you know, who were forced to shut down because of a global pandemic, right? To keep them going, to keep people getting paid on the payroll. I mean, just to know that people are out there that are like, thinks that's an opportunity to capitalize is actually kind of almost disheartening in a way, I guess. All right, but on a better note, this is actually my favorite building in all of New York. And this building is fantastic during the summer. I actually used to eat my lunch here. I used to sit on this little ledge, look at the beautiful water fountains here. Look at 432 Park Avenue, beautiful building on Billionaires Row. Hey, Nina is here. What's up, Nina? Good to see you. But here we have it, the Seagram building. One of my favorite buildings on Park Avenue. Hey, Dusty Cole, good to see you, my friend. I'll try to stand at the entrance and you guys could really see why I like it so much. So imagine walking out of your office and this is your view. Now, as you know, the reason why I like the building so much is because they actually built it very far away from the street. It's not like all the other buildings on Park Avenue that are built directly, pretty much right on the street. You sort of have this park area. Hey, 3T3 says sadly many people did defraud, plus get those loans as they laid employees off. Yeah, I mean, talk about crazy, that's crazy. Now, again, there's probably going to be huge investigations into that because I think one of the main, and I could be wrong, this was so long ago. I mean, the pandemic was almost 3 years ago now. I think one of the main stipulations in order to qualify for the PPP loan is that you do not lay anybody off, right? I think that was one of the main, it wasn't that the point of the program is to get the loan so you could pay your employees? Yeah, that's bizarre. So think about that. If there were people that took out the loan and then still laid their employees off, well, that sort of defeats the purpose of the loan in the first place. That's really sick. Oh man, that's nuts. Hey, Becky D is here. What's up, Becky? Good to see you. Silversmith, welcome. Ryan Beck says it's a double whammy though. You get taxed for the PPP loans, then you get taxed for the investigation into those who defrauded it. Yeah, that's true. Yeah, it was a disaster, but again, I mean, you know, I guess it's easy to look at it in hindsight. I don't know. And all the money printing caused all the inflation too. Hey, J9, good to see you. This is great building view. Thank you so much. Mike C says next you'll tell me TARP recipients only use the money for stock buybacks. Well, I think you know, to be fair, during the 2008 financial crisis, I think the American taxpayer actually wound up making a little bit of money on the deal. Yeah, Ryan Beck says there was really no good solution at the time. I agree. Well, guys, speaking of major players on Wall Street, here we have Blackstone. You could think about Steven Schwartzman, located right here on Manhattan's Park Avenue. But for those of you who are just joining, tonight's conversation mainly was focused around Apple's big announcement. So if you're just joining us, Apple did announce their new program, Apple Pay Later, which is now going to compete with the buy now, pay later pure play companies such as Affirm. I think Affirm was down about 7% on the news, so we talked about that. Also, Canadian company Lululemon reported a great quarter, up 13% after hours after a beat and raise quarter. So they beat on both the top and the bottom line. They beat on EPS estimates and on revenue estimates. And their guidance was very good, very, very positive guidance for Lululemon. Then we talked about the S&P CoreLogic Case-Shiller Index, which came out today. You're seeing significant weakness in the housing market continue, specifically in markets on the West Coast as opposed to markets on the East Coast. So if you type !SPC in the chat, once again, the Nightbot will drop that link to S&P Dow Jones Indices website where you can look at the report yourself. And I would highly suggest you do, because if you scroll down about a quarter of the way down the page, you'll see Table 2, where it gives a really nice outline, a really nice detail of the individual markets in the United States that suffered the most aggressive price declines and the markets in the United States that held up rather well. So you're seeing the biggest declines in places like San Francisco, and you're seeing the biggest price gains in places like Miami. So I think Miami, Tampa, and Atlanta again reported their highest year-over-year gains among the 20 cities in January, with Miami leading the way, up 13.8% year-over-year, followed by Tampa in second with a 10.5% increase. Atlanta not too far behind, up 8.4% year-over-year. And pretty much every single major city on the West Coast, you could just inverse those numbers and you're seeing year-over-year price declines. I think we have almost an 8% price decline in cities like San Francisco, California. Seattle is down very big. Going back to California, you have San Diego, I think down 5% year-over-year. So for whatever reason, we talked about many of those reasons, or many of the alleged reasons, why the East Coast is holding up way better than the West Coast. And I think a lot of it is pandemic induced. You sort of had this magic elixir of catalysts to drive people out of California. Not only the high taxes in some of these major cities like San Francisco, not only the really big pickup in homelessness, but just the general high cost of living, and having a lot of those cities be very tech focused, heavily weighted towards technology jobs. Obviously during the pandemic, you could work remote, you could really work from wherever you wanted to. So why should I be a software engineer in a place like San Francisco when I could move somewhere to the Midwest to buy a really, really nice house, increase my quality of life, reduce my expenses, and be just as productive, if not more productive? So pretty interesting. Yeah, Meg Lowe says, yes, totally agreed. The pandemic cleared the herd. This is a really interesting development here. Now, obviously, this is the site of the famous Waldorf Astoria, but they are doing a complete gut renovation, which I think will be completed by early next year. So this is the Waldorf Towers. It'll be residences and a hotel, or maybe just residences. I'm not too sure. But they will be completing this soon, and I think it'll be a pretty good, I would say, restoration of a very classic and iconic place in New York, right here on Park Avenue. Yeah, J9 is asking about the statue in the lobby here. So this is a very famous artist. The artist's name is Kaws. I think you pronounce it or spell it K-A-W-S, I believe, for Kaws. And very famous. I actually used to work at 1166 Avenue of the Americas. We used to have that same exact sort of sculpture in the lobby, but instead of it being pink, we had the black one. Now we are on the campus, I should say, or the building construction site of JPMorgan Chase. This is 270 Park Avenue, and this is going to be Jamie Dimon's brand new office tower. Now, I think Ryan Beck is going to like this one. I've rattled this statistic off before, but Jamie Dimon recently did an interview with Bloomberg TV, and then I'm going to sign off here because it's getting late. Jamie Dimon recently did an interview with Bloomberg TV, and he said for the first time in company history, JPMorgan Chase has more employees in Texas than they do in New York. Now, how crazy is that? I never would have thought that in a million years. But again, I mean, as we talk about, housing prices today falling off a cliff in some specific locations across the country, I think if you run the analysis, I think you would have very high correlation with a lot of employers leaving those particular states, right? You've seen a lot of big companies leave places like Illinois, right? Chicago, Illinois. You've seen a lot of big companies leave places like California and move to Texas, move to Florida, move to the Carolinas. I mean, that's definitely going to impact the prices of not only single-family homes, but big commercial real estate as well. So we'll keep up on that. And team, we're going to end it there. I'll leave you guys off at Park Avenue and 46th Street, right at Grand Central Terminal. If you guys enjoyed the live stream, feel free to join us back here tomorrow, live at 8:30 p.m. New York time. If you enjoyed the stream, feel free to leave a like on the video, share the show with your friends, subscribe to the channel. If you want to connect with us on Twitter, you could follow us at Walks Wall Street, and we will see you all tomorrow. So Justin S., thank you so much. Meg Lowe, I appreciate it. Cena, Sunshine After Rain, thank you so much. Blinkist is here. Wendy England, appreciate it. David S. The Mighty Bull, thank you so much. Shadow Stock, once again, thank you for joining us. Enjoy your night. Michelle McGraw, Abdullah, Muhammad, Timothy, have a wonderful Wednesday, already the middle of the week. Fred X, God bless you, all the way up there in Alaska. Penelope from Tennessee, Bree Grams, Jennifer into the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere and you just need to know where to look. See you guys tomorrow.